Office buildings will soon become shelters for the homeless. Yes, you heard that right. Meanwhile, people keep buying real estate like there's no tomorrow, convinced that prices will always rise. The bubble is about to burst, and if you don't understand what's happening, you'll be one of those paying for the party. Because this isn't growth, it's inflated credit. And that credit, my friend, is debt. This is how the game works. They plant the idea in your head that owning property is the key to success, but what you're actually buying is a trap. Don't believe me? Let me tell you something. Back in 2008, people were saying the same thing. The market always goes up. It's a safe investment. And then, boom. Bankruptcies, foreclosures, people losing their homes, and banks getting bailed out with your money. We're in the same situation again. But here's something nobody is telling you. If inflation keeps rising, the rich get richer, the middle class pays more taxes, and the poor, well, the poor aren't even part of the conversation, because while you're fighting to buy an overpriced house, those who understand the game are selling. Yes, selling. Why? Because the Federal Reserve is no longer printing money like before. The faucet has been turned off, and when money stops flowing, prices drop. I'm warning you now, what's coming isn't pretty. Want to know how to protect yourself? Don't worry, I'll tell you. Banks aren't playing the same game anymore. The money faucet has been shut off, and now comes the squeeze. Before, they were printing money like napkins at a party. But now, they're doing the opposite. They're destroying money. And what happens when money is destroyed? Two things. Asset prices start to fall, including real estate. Credit becomes more expensive. So, if you thought your dream home was expensive before, get ready. Because with rising interest rates, banks are going to eat you alive with interest payments. Now tell me, where do you think that great real estate investment you bought, hoping to sell for a profit in a few years, is headed? Straight to the ground. Because when prices fall, people feel poorer. And when people feel poorer, they stop spending. That means less money moving, fewer opportunities, and worst of all, fewer people willing to pay those rents you thought would make you rich. If you think I'm exaggerating, just look at what's already happening. Blackstone defaulted on a debt in New York, with a bunch of buildings at risk. Entire apartment complexes are losing value because tenants can't pay. The big investors are exiting the market, while small buyers keep fighting over overpriced properties. It's the same pattern as 2008. The difference? This time, no one is coming to rescue you. Now comes the million-dollar question. What do you do with this information? You have two choices. Keep believing what your real estate agent tells you and walk straight into a debt trap. Wake up, see the game for what it is, and learn how to move like those who actually make money. And if you're wondering how to protect yourself and take advantage of this crisis instead of becoming just another victim, well, that's what I'm about to explain. There are only two types of players, those who know what's happening and take advantage of it, and those who get stuck footing the bill. If you don't want to be in the second group, you need to act now. How do you protect yourself and turn the crisis to your advantage? Forget the buy-to-sell mentality. If you're thinking about buying real estate because prices always go up, that idea no longer applies. Prices will fall, and when they do, many will be stuck with properties that aren't worth what they paid for them. Liquidity is power. The winners in these cycles aren't the ones drowning in debt. They're the ones with cash to buy when everything is burning. Got savings? Protect them from inflation. Got investments? Don't let them get trapped in assets that are about to crash. Got debts? Get rid of bad debts before they drown you. Think like the rich. In 2008, those who understood the game bought properties at laughable prices. The rest? Well, they ended up selling their homes for pennies. Ruined. The story is about to repeat itself. When fear grips the market and everyone rushes to sell, that's when you need to be ready to buy. Don't rely on a single income stream. If you think your salary keeps you safe, you're already in trouble. When the economy tightens, people lose jobs. When inflation rises, your money is worth less. The people who survive these cycles are the ones with multiple income sources. And no, I'm not telling you to start selling courses on Instagram. I'm telling you to diversify. In a world that runs entirely on credit and consumption, you must make sure your money doesn't depend on just one place. It's time to move before it's too late. If there's one thing that's clear, it's that people who don't understand how money works are the ones who suffer the most during crises. So you have two options. Ignore all of this and keep going like nothing's happening until it's too late. Start educating yourself about how the financial system really works and how to take advantage of it. Because believe me, those who know how to move in these cycles don't just survive, they get richer. It's the same story every time. One group of people loses everything because they thought, this could never happen. Another, much smaller group becomes obscenely rich because they understood the game before everyone else. Let me tell you how they did it last time. Back in 2008, when the market collapsed, most people panicked. They lost their homes, their investments, and in many cases, their jobs. They were drowning in debt and had no way to stay afloat when everything crashed. Meanwhile, those who understood the system did the opposite. They sold when everyone else was buying. They waited for the crash, and when panic took over the market, they bought at ridiculous prices. They bought houses that had once been worth $500,000 for just $100,000. They bought stocks at rock-bottom prices, stocks that later shot up 10x in value. They bought gold, silver, and other assets that protected their money while the financial system collapsed. And when the storm passed, they were the ones sitting on top. This is what's happening again. The question is, what side of history do you want to be on?